Okay, we've been circling around the 5,300 mark, but haven't quite had our date with that level yet. While oil and gas stocks, of course, are holding firm, Reliance is the star in today's trading session, backed by a good move for Tata Motors, JP Associates, Reliance Power, GAIL, Axis, as well as SAIL, and DLF holding strong ahead of their first quarter earnings. It's the Bank Nifty, which after a weak European close has come off from the top of the day. So pull up the Bank Nifty for you and show you how it's currently panning out. You've got a BPCL, Dr. Reddy's, ITC, Wipro, which again are trading in the red. And the Bank Nifty has petered down, now holding just about 1% in the grey.
Okay, let's kick off the show with a big view on Indian equities. Geoffrey, global emerging market strategist at Citi Investment Research and Analysis, is underweight on India and does not expect an upside in the market from these levels. He does, however, expect the Reserve Bank to cut rates through the course of this financial year.
We have an underweight on India, which means that we just think it'll underperform other emerging markets. In fact, our target for the Indian market for the Sensex index is 18,400 for the end of the year. Inflation is quite high in India. So although we think India will probably cut rates by 50 basis points over the rest of the year, maybe 75, you know, they have constraints on their ability to ease policy, which really don't exist in a lot of other emerging markets. We think India is considerably cheaper than it was. But on the other hand, so are emerging markets overall. So we've got, as I said, 9.5 times forward earnings for emerging markets overall. India is trading somewhere between 12 and 12.5 times. So India is cheap compared to its own history, but it's still trading at a premium of not far short of 30% compared to other emerging markets overall. If the dollar were to go materially higher in general around the world, I think the rupee could come under some further pressure, but it does seem to have settled out in a range around the 55 level, which is pretty much where our forecast is.
Okay, let's analyze the technicals of the current market day then. Ashwini Gujral, fund manager at ashwinigujral.com, joins in on the show. Ashwini, hi, afternoon. Haven't quite made it to 5,300, and it's the Bank Nifty which is holding the Nifty back.
Well, if you take the Reliance stock out of the picture, the Nifty is probably at 5260. So given that, you know, one race horse cannot take the market higher, so we are basically, you know, panning out like we've been suggesting that we'll go for a retest of about 5350, which means the market will rally but will not be able to take out 5350 on the upside, and that is how this upswing will end, and the market will then decline towards the lower end of the range, which remains at 4800. So the point is that it's still a fairly narrow range. On the downside, we can't breach 5160. On the upside, you know, leave aside 10 points, you can't really get past 5270. So this 100-point range remains, and you know, we'll have to look for a decisive breakout on either side to be able to take a direction. Even today, volumes are low. So this sort of, you know, up move with low volumes, with just one stock taking it higher, Bank Nifty refuses to participate, is, you know, unsustainable. I don't think we'll be able to stay past 5300.
Okay, don't think we'll stay past 5,300. That's Ashwini's call. But like he was saying, it's a one-stock show, really. The story is all about Reliance Industries